Welcome investors. Hopefully guys are doing well. Welcome back to maybe a relaunch, I guess, if you will, of this channel. We're also bringing you a brand new program here on the channel. We're going to be taking a weekly look at the semiconductor space, where very similar to the FANG Stock Recap show that we do on the investor channel, where we basically recap all the major news from all the, what some people call the Magnificent Seven stocks or the FANG stocks. We recap all the major news, and then we also dive into the technical analysis as well. We're going to do the same thing, but just strictly for the semiconductor space, because obviously, this particularly over the last year, but you look back through history, the semiconductor is at the cornerstone of technology. It's obviously in all of our laptop computers, our cell phones, it's in the data centers, and it's really been the driving force behind artificial intelligence over the last year. So I'm excited to bring this program to you. The production value and those types of things will get better. I'm launching a new financial media company probably by maybe not the end of this month, as I see it's July 21st. We'll have something like that probably starting in August. We're working on a website. I was just in Southern California meeting with our team. I have an investor. So we've got some exciting things coming. And the great thing is it will be more authentic. It'll come directly from me. And hopefully a lot of the content will actually be free and maybe supported by ads and maybe supported by some of you in the community that have been so generous with your comments and watching the videos from me over the years. So on today's show, we're going to be talking about, is there a rotation, though, out of the semiconductor stocks? We saw $500 billion in market cap really get drained out of Nvidia, Taiwan Semiconductor, ASML, two companies that we'll talk about today as they reported earnings last week. We got a lot of news to dive into as well. Nvidia is making investments in the robotics space, and if you've been following this channel and some of my comments about robotics, certainly if you watched Nvidia's presentation at Computex, they basically closed out their presentation saying that robotics is what's next. Robotics is going to really take artificial intelligence and apply it to a completely, maybe kind of a field that is set for takeoff, if you will. Now, we have political drama as well. Obviously, if you've followed politics over the past couple of weeks, starting with the debate, I think that was maybe 3 or 4 weeks ago. And then you obviously had the tragic events at the Trump rally. Been a lot of ups and downs in politics. And certainly over the next couple of months as we move into the next election, could be some interesting things. And semiconductors are actually somewhat at the center of that. And so today we had Trump make some Taiwan comments on the country of Taiwan. And so we'll talk about those comments and what they potentially mean to maybe a new administration's handling of the defense of Taiwan and those types of things. We'll get into the earnings of Taiwan Semiconductor and ASML, both companies, obviously critical companies to maybe even the backbone, if you will, of the semiconductor industry, with ASML making the lithography machines that TSM puts in their fabricating facilities where they fabricate virtually all of the leading edge chips. And we've got to close this out by looking at some charts and the graphs. We'll take a look at two of the leading indexes, which is the SOXX, the SOXX, and the SMH. We'll look at those ETFs. Because what happens is you get these headlines, $500 billion in market cap, basically drained out of the chip stock sector. Well, we'll look at it technically and say, is this cause for concern, or is this just an area where these stocks tend to pull back? We'll also go through many of the popular semiconductor stocks as well. We'll obviously look at Nvidia, we'll look at AMD, we'll look at Intel, we'll look at ASML and TSM after those companies reported earnings. We'll also look at Broadcom, NXPI as well, maybe one of the forgotten semiconductor companies. And look, I'm totally open to suggestions. This is more or less a pilot episode. We're not really going by a script. We're not really super polished on these things. So leave me a comment down below. If there's something that you like about this show, if there's something that you don't like, you like something that maybe potentially gets added in the future, or just in general, any type of content ideas that we can run with over the next couple of years. Because like I said, we're launching a brand new, what I'm going to call a financial media company here on YouTube, via newsletter, via social media, and all those types of things. We're going to be trying to deliver as much content to you as possible to help you out with your investing journey. Now, Chip stocks, like we said, losing $500 billion in market cap amid export control fears. So we have two different type of political things going on really at the same time. Certainly, if you've been following the chip sector over the last year, current President Joe Biden has had very, very strict export controls on all semiconductors. Companies like Nvidia are not allowed to sell their highest end GPUs into the country of China. When we talk about ASML, they make spectacular one-off kind of lithography machines, which are the premier lithography machines in the entire business. Well, this company can't sell those lithography machines into the country of China. Also, TSM not allowed to sell some of the high-end chips that are made by Nvidia, AMD, and others into the country of China. And so there's these battle, if you will, over these AI chips. And I think one of the discussions that we have as we move into an election cycle where potentially Joe Biden and his administration doesn't win this next election, and then you have a reemergence, if you will, of former President Trump. And so some of the things that President Trump said this week are making news. And this comes courtesy of Bloomberg Business Week, which is actually a pretty awesome magazine. If you have Apple News, you should be able to get access to it, but you can probably also go to Bloomberg's website and also maybe get a subscription to the magazine as well. With former President Trump, you've always got to read his quotes directly as, he likes to pontificate, if you will. But he said this about the country of Taiwan, which is obviously the home to Taiwan Semiconductor, so a very critical country as it relates to manufacturing of semiconductors. I mean, they basically manufacture all of Nvidia's business, which is obviously at the heart of AI. President Trump said this: Taiwan took our chip business from us. And he says, I mean, how stupid are we, referring to the United States? They took all of our chip business. They're immensely wealthy. Now, some people, detractors of President Trump, would just say this is a bold-faced lie. Other people that are maybe more moderate or certainly conservative would say, well, we're giving President Trump some leeway with this statement. Taiwan didn't necessarily take our chip business. If you look at the market cap of Nvidia, one of the biggest, actually the biggest, quote, chip company in the world by far in terms of market cap, they're still based out here in California. They are still the most dominant chip designer, if you will. Now, what Taiwan did take, I guess you could say that maybe they take, or they basically really kind of took the lead on, is the actual manufacturing of chips. But we are still, and I'm talking about the United States here, the dominant chip designer. When you look at Intel, AMD, and Nvidia, that trinity of companies is still by far the leaders as it relates to chip design. They just happen to manufacture all of their chips, or primarily all of their chips. Intel does some manufacturing themselves, but AMD and Nvidia in particular use TSM. Now, obviously, with the CHIPS Act that was passed over the past couple of years by the Biden administration, you have TSM working on fabricating facilities in Arizona, and I believe those are coming online either later this year or early next year. You have Intel working on several new fabricating facilities as well, I think both in Arizona and in Ohio. And these things take time. This is, obviously it took time for the manufacturing of chips really to be exclusively be kind of a Taiwan thing, and it's going to take some time to kind of offshore that, if you will, off of that country. Now, Trump went on to say, I don't think we're any different than an insurance policy, basically referring to the fact that the United States has agreed to protect Taiwan. In fact, there is a law that has been passed and signed by a former president based on protecting Taiwan. And he says, why? Why are we doing this? Well, part of this, again, first of all, President Trump is not a traditional politician where he probably knows all the signed legislation and maybe every single policy, certainly as it relates to foreign policy, in detail. Some people, again, would criticize him for this. Some people would say he's actually bold-faced lying here, or that he should know this. As investors, we really don't have any choice in this matter. If this man is going to be president for the next 4 years, we have to deal with what he is presenting to us. And so what he's presenting to us here is kind of a hard line as it relates to Taiwan. Now, as I understand it, I did some research. Taiwan does pay the United States for some of the protections that we provide it as it relates to certain military equipment and different types of air defense and those types of things. Taiwan does actually pay for that. So there is some hyperbole, if you will. Some people would also say this is just another one of Trump's lies, if you will. I look at this as more, these are kind of unfiltered comments that you don't normally see from a politician. Politicians tend to be very polished. They don't like to be put in these situations where they're making comments where they might not know the entire law or the entire situation end to end. Trump is willing to just go off. And so it'd be interesting. He's certainly kind of opening up the door to maybe renegotiating some of those deals as it relates to Taiwan. But here's what I think is interesting is that despite all the sanctions that we've seen put in by the current president, Joe Biden. So again, the country of China is not allowed to have access to any of the high-end chips, and truly somebody inside the President Biden's administration, because let's be real, it's not, and this is not a slight to the current president, but it's not Joe Biden himself that is really controlling the exports. He has somebody in his administration as it relates to not only technology, but probably more specifically national defense. They truly believe China getting their hands on the high-end Nvidia chips is a national defense thing. It could also be an intellectual property thing as well. If they get their hands on too many of these Nvidia chips, well, they'll be able to just simply remake them, and then maybe Nvidia's business model, if you will, starts to suffer as potentially maybe Chinese knockoff chips, if you will, start to get developed. But what we've learned is Chinese companies do have access to NVIDIA's AI chips, and this is really through Google and Microsoft's cloud services. So obviously Google and Microsoft have these large cloud businesses, and through those cloud data centers is you're able to get access. You and I can get access to the high-end GPUs as well, as long as we're willing to pay for it. So here's what's interesting as we move in. Obviously, former President Trump's comments are very interesting. We'll see how that relates to the relations between China, Taiwan, and the United States, and how that tricky relationship is handled. But more interestingly than that, will the current administration's stance in terms of export controls, and let's assume that Trump gets reelected in November, will he carry that over as well? Will he have the same export controls, or will the Chinese market open up? And then that's probably the most interesting aspect for us as investors. If these export controls are starting to be relaxed by the next administration, and there's no indication whether they will or they're not, but if we do get some indications that these export controls will be relaxed, well, guess what? That's a huge, huge, huge upside business for both NVIDIA, AMD, TSM, ASML, and many of these other companies, which again, over the past couple of years has been shut out of the China market. And if that market opens up, well, it'll be like the floodgates opening up, and you've got a lot of earnings and revenue and profits, which probably aren't priced into these companies at the current time. So that's kind of the geopolitical situation as it relates to chips. Obviously, as we start to move closer and closer to election day, these things start to maybe balance out. Right now, obviously, I think most people would agree it's former President Trump's race to lose, but we've got a long, long, long ways to November. And if the news cycle is anything like it's over the past couple of weeks, I mean, who knows what is going to be happening by the time we get to November. Certainly be interesting to follow. Because again, as it relates to chip stocks, there's a lot of geopolitical tensions and risk and opportunity for investors as well. Now, NVIDIA is taking stakes in smaller companies. We've seen them do this with CoreWeave. They've done it with some other companies as well. They did it with a biotech company. I thought this was interesting. They invested in a company called Serve Robotics, which is a ticker symbol SERV. Pretty small, relatively small company, $277 million market cap. And I tell you what, when NVIDIA made their investment, it was just $2.42 per share. Now you're over $7.55. So imagine the types of unrealized gain Nvidia is already showing on this investment. Now, it's interesting. So Serve Robotics is there's numerous companies in this space. This happens to be a public company. There happens to be private companies as well, but they have these kind of sidewalk mobility robots, if you will, that deliver food, maybe even packages, leveraging things like Uber Eats, some of the other delivery services as well. Just thought it was interesting that Nvidia is moving into this area and making an investment in a public company, but it shouldn't come as a big surprise because, like I said at the top, if you watched Nvidia's Computex keynote where Jensen Huang got up there and he could really talk about anything. I mean, he could literally just kind of get up there and say hello and drop the mic and everybody would cheer because Nvidia's had just that good of a year. But he spent the last 10 to 15 minutes of his keynote saying this is what's next. These types of robotics, not just delivery robots, but also we've seen the advancement of humanoid robots with Tesla and others. We are just seeing kind of the evolution of robotics. It's been kind of at a tipping stage. It's been at a stage where you've seen some growth, but you just don't have that kind of market leading kind of iPhone moment as it relates to robotics. And I truly believe we're probably in the next 12 to 18 months, we will have the iPhone moment or the ChatGPT moment, if you will, as it relates to robotics. Somebody will release, maybe it's Tesla's Optimus, maybe it's Figure AI with their humanoid robot. Somebody's going to release something that just revolutionizes, maybe not like an iPhone where it's in our hands, it's in our pockets, and it just immediately kind of takes the world by storm, or like ChatGPT where we get on there and we realize, wow, this is kind of cool. It's interesting. It's like the next evolution of a search engine, if you will. It might not be kind of a consumer-driven thing, but it could be that with all these warehouses, with inflation, with fast food, and all these types of things, seeing these types of effects of inflation and regulatory pressures, well, robotics could solve something there, and it could be an interesting time ahead. Now, to go along with what we kind of talked about off the jump is that chips may be volatile through the election, but the fundamentals are intact. We'll certainly get a view of that when we look at TSM and ASML earnings. Tell you what, these companies are producing huge, great results, and certainly, though, you could have some volatile price action. We'll talk about that when we get to the technical segment. Other companies in the semiconductor space, you had Air Test Systems. This is ticker symbol AEHR. This company really took storm and really had a dramatic price increase over the past couple of years as they make testing equipment for silicon carbide. Silicon carbide is a special type of silicon which handles heat and stress better than typical type of silicon that you might find maybe in your cell phone or your laptop. These are found in electric vehicles. So as you saw electric vehicles really rise in sales and kind of get a little bit bigger market share, you saw dramatic increases in Air Test Systems as it created one of the only test systems that could test these silicon carbide chips that were going into Teslas and other electric vehicles, also just normal vehicles as well. However, you saw a dramatic drop off in share prices. However, the company reported earnings last week and they gave guidance which was well above expectations. Expectations were close to maybe 68 million for the upcoming year. Revenue coming in at about $70 million. Now, when I was at Brownstone Research, we actually recommended another really good test system stock, and it was this company called Camtech. We recommended this sometime maybe in the late 2023 recommended this, maybe when it was like $60 or $70 per share. So this company has test equipment for high bandwidth memory. So what we saw was the trend with AI chips like made by Nvidia and AMD. Well, they were being made, and they were being made with more and more high bandwidth memory. And if you followed SK Hynix, if you followed Micron, if you followed any of the memory makers, you've seen that they've had just skyrocketing demand with high bandwidth memory. Well, we kind of connected the dots and said, well, wait a second, they're going to need a lot of test equipment. If they're going to be making all this memory, they're going to have to scale up their test equipment because chances are they don't have enough of that. And we recommended Camtech. This company's still only about $5 billion. It's kind of come off its highs. There's probably opportunities in this one if we get further pullbacks. Again, we're going to be talking about a lot of the major semiconductor makers, but there's certainly opportunities with these kind of smaller caps, and I'll do my best to kind of point these out as we continue this show. Now, AMD, Broadcom, Marvell likely to see increased AI benefit in the second half. It's according to analyst TD Cowen. What we are seeing is a broadening out of these companies' capabilities. Certain AMD is continuing to roll out their more advanced chips. Broadcom received a lot of attention, their stock split, but also what's interesting about Broadcom, I read this really interesting research report, and what it's talking about is, I'll try not to go too deep in the weeds here, but Nvidia, what Nvidia tries to sell you is not just the GPU. And so you can buy the GPU, but you've got to connect all of these GPUs together with different types of networking cables. And there's also actual semiconductor chips that control all of the traffic and the data, if you will, that's flowing between all of these chips. This is all like an integrated system, if you will. You can't just buy the GPU from Nvidia and now you're off and running. You've got to buy kind of the interconnecting system. And so what Nvidia sells you is kind of an NVLink system that is proprietary to Nvidia. So your choice with Nvidia is you are going to buy the GPU, but then what Nvidia likes to do is sell you their NVLink kind of interconnection system and all the networking system that is proprietary to Nvidia. And so you have to set up a completely new server room, if you will, if you're going to roll out this type of thing. But what's interesting is if you look at most data centers around the world, they're actually operating more or less on Ethernet or Ethernet, depending on how you pronounce that. Broadcom and Marvell are by far the leaders as it relates to that type of networking. And what I have found is that early on, most people wanted allocation of NVIDIA chips, and the easiest way to get allocation was to agree to NVIDIA's term to onboard and accept their terms of their proprietary networking platform. What we are going to see going forward is more companies are going to use NVIDIA GPUs, but they're going to pair that with Broadcom, maybe even potentially Marvell networking systems, as it offers more flexibility. Obviously, also, you're not locked exclusively into NVIDIA's ecosystem, if you will. Also, there are other advantages when you go with Broadcom. So there is a very small company that also relates to this, and that is this company called Celestica. Might not be pronouncing that right, but the ticker symbol is CLS. According to my research, if more and more companies move away from NVLink, move away from the proprietary NVIDIA networking system and move to Broadcom and Marvell's, well, this company sells networking cables that will be paired with what Broadcom has. And so if you're bullish on Broadcom, you should also be bullish on CLS. Now, speaking of Broadcom, they are a custom silicon maker. In fact, I believe in terms of dollars, they are number 2 behind NVIDIA in terms of selling custom GPUs. And I tell you what, if they charged and had the gross margins of NVIDIA, well, they'd be even higher. Since they make custom silicon, they take maybe a smaller percentage of the actual sales price, allow the customer, in most cases, it happens to be Google and Meta as well, I think is rumored to be working with Broadcom. The company is also rumored to be working with OpenAI about producing an AI chip. Broadcom is basically the go-to. If you want to create your own GPU, your own tensor processing unit, or TPU like Google, you go to Broadcom because they have a lot of intellectual property. They also have the networking chips as well. It's one of the only companies that you can get kind of a custom silicon, rather than going off the shelf with maybe like an Nvidia or an AMD, although both of those companies as well have different types of networking solutions. Now, let's jump into the earnings because this triggered some of the rotation out of semiconductor stocks. As we saw over the last week, Taiwan Semiconductor started the week at about $187 per share, and it was down nearly 12% to finish the week at $165 per share. Are you buying the dip on Taiwan Semiconductor after they reported earnings at about $20.8 billion? Now, on this press release, I don't know if this is right. They say that was 32% growth, but when I come over here to TSM Financials, I am seeing 40% growth on that that's neither here nor there. Company is seeing dramatic increases in their 3-nanometer process, which is basically all of the high-end chips as well. Company obviously makes all of Apple's chips as well. And so as Apple's maybe find some success, maybe with a new iPhone launch or anything like that, well, that certainly will benefit TSM in the upcoming quarters. I tell you what, Wall Street has TSM for like mid-20s growth rate out into the future. In fact, all through 2025, as despite all the reshoring efforts and maybe any kind of rhetoric that you get out of former President Trump, this is still the premier chip manufacturer in the world, and that is not going to change really anytime soon, to be honest with you. Now, company had $20.8 billion. They had $11 billion in gross profit. Company constantly gets pressured. Like, everybody can see the financials of Nvidia and see how much money they're making. So some of the questions that TSM is always asked on their conference call is, can you raise prices on these companies since they're making money hand over fist? Now, the Taiwan culture, which you do have behind this company, is much more of a partnership rather than kind of a blood-sucking, neck-squeezing capitalist that you might find here in the United States. I think if TSM was run by a bunch of Americans that had kind of that American attitude, well, they would be jacking up prices tremendously. But Taiwan looks at this as a partnership, and they want to maintain that partnership with Nvidia for a long time. They actually want Nvidia to do well. They want Nvidia to make a lot of money, so they continue to come back to TSM in the future. We'll see if that strategy plays off in the long term, but it certainly has played off up until this point. The company income from operations, $8.9 billion, so off of $20.8 billion in revenue. You get about $8.9 billion in income from operations. After you pay your taxes, you get about $7.7 billion worth of net income. Now, from cash flows, really solid from this company. That is because they have a big depreciation and amortization line, as this company just invests a ton in purchases of property, plant, and equipment. We'll see that here in a moment. Well, they get to depreciate that over time on the cash flow statement. So you had, in the last 6 months, $25 billion worth of operating cash flows. Now, on property, plant, and equipment, you spent about $12 billion of that. They do pay some dividends and a relatively small buyback as well. From a balance sheet perspective, the company has a boatload of cash equivalents coming in at about $55 billion, balanced off by not a ton of liabilities, honestly, and they've got this huge property, plant, and equipment line at about $95 billion. This company has nearly $100 billion worth of property, plant, and equipment value, which obviously is one of the things that the United States has been protecting from Taiwan, from an invasion of China for a long period of time. Now, the other company that released their earnings is critical to Taiwan Semiconductor's success. That is because Taiwan Semiconductor uses ASML's lithography machines to actually make these high-end chips. And so these companies are almost hand in glove, if you will. In fact, late last year, recommended both of these companies to our subscribers, and both of them just continued to perform relatively well. Well, I tell you what, over the past week, ASML did not perform well. About $1,100 stock to begin the week. Boom, down 17.8%. As this is a really, really richly valued company. You'll see that here in a moment. Taiwan Semiconductor is $766 billion company. Basically, a lot of that market cap got shaved off this week, or a fair amount of that, but they generate a ton of revenue. They have a ton of cash. They have a ton of this property, plant, and equipment. It's a super value company. If this, let's just assume like TSM put themselves on eBay and anybody could go on there and bid. Oh my God, Apple and Nvidia and all these companies would be falling over themselves. You'd probably even have sovereign governments falling over themselves trying to bid on this company. So, and look, from a valuation perspective on TSM, it's not wildly overvalued. 25 times forward, growing at, and I showed you the growth rate. This company's growing at like a low to mid 20% growth rate into next year. So it's not wildly overvalued. We'll talk about this technically, but there are areas where you certainly should buy Taiwan Semiconductor. Now, ASML is a little bit of the opposite. This one has been bid up by investors. You got a $350 billion market cap, but you got a forward estimate on this one coming in at $43 billion. And when you look at these forward estimates, they're a little more lumpy than it relates to Taiwan Semi. You have some quarters like the upcoming quarter where you might only grow maybe 10, 11%, but then you have future quarters where you have kind of maybe these big purchases finally come through where you have these larger growth rates. So this is a company that kind of generates more lumpy revenue, and it can create some volatility in the shares, which we saw this week, again, down about 18%. But the company is slumping on fears more United States exports curbs on China will dampen solid Q2 bookings. So here's your upside again with ASML. If you have a continuation of the Biden presidency, also you could probably look at it, although this wouldn't be a guarantee, but let's maybe kind of go down a rabbit hole and assume maybe Vice President Harris is either given the opportunity to run this year, or maybe you get a re-election of Biden and then maybe something happens to him, if you will, and President Harris is kind of anointed the president over the next couple of years. I don't, not knowing, hearing it from her mouth, but I would assume she would continue the export curbs on China. I think the mystery is what will President or former President Trump do if he's reelected? If he lifts these export curbs or softens them even a little bit, you're going to see ASML stock react violently to the upside, because that would create a lot of business that, again, just hasn't been there over the past couple of years. Now, the company reported their Q2 earnings. They gave us Q3 guidance, which was basically reaffirmed, and their full outlook on the entire 2024, more or less in line with what the expectations were. It's just, again, this is a way more overvalued, because, again, you see here total net sales over the past year at ASML, $6.2 billion. Last year, they were $6.9 billion. So you got a company that is worth well north of $350 billion, producing quarterly revenues, and I say just $6.3 billion. Not actually super impressive. Now, it's a high gross margin business because they're the only one basically doing it. So they earned $3.2 billion, income from operations coming in at 1.8. But all of this is a decline year over year. So you had declining revenue, declining gross profit, and declining income from operations. The company certainly can survive it. They've got plenty of cash on hand. They also have a fair amount of inventory. Company saying that they have about $11 billion in inventory. Some of that, I'm assuming not a lot of that is finished goods, since these things are big, complicated machines. They're probably piecing these things together over a long period of time. And so that inventory is likely building up for Q1 of these big kind of growth into $8-9 billion worth of revenue. Now, in terms of cash flow, looks pretty good in the most recent quarter, $1.6 billion in net income. You had about $1 billion. In fact, it's a little bit less than that, about $1 billion of operating cash flow. For the past 6 months, though, it's just $671 million. And again, this company is worth a lot. It's worth $350 billion. These are not $350 billion cash flow numbers or anything like that, although they do pay a dividend and they are doing a relatively decent buyback, although in the most recent quarter they didn't buy back a ton of that. They do have to invest a lot in property, plant, and equipment. I might be saying dollars here. This is probably in euros, but I think the exchange rate is close enough, about 531 million euros now. So ASML, in my opinion, is a stock you got to get at the right price. TSM is one that you're certainly looking to be a little bit more aggressive on, as the valuation is certainly more attractive. Now let's come over here and look at these stocks. Technically, this is where you're going to see evidence of potentially reversals in terms of demand, rotation out of these stocks. It's always going to show up in the price. Some people think you've got to get in here and, do all this deep analysis on PE and fair value and intrinsic value and those types of things. Guys, all of that stuff just shows up on the price chart. Make your life so much easier. Forget PEG ratios and all this other stuff. It all is pinned to price. And so just follow the price action, and that's going to make your life a whole lot easier. Here's the SOXX ETF, SOXX Semiconductor ETF. If you're certainly not in there picking winners and losers in the semiconductor space, the ETFs are your way to go. SOXX is one of the most popular. It's also one of the most liquid. Really, since the bottoms of the markets in 2009, this thing has been on a rapid uptrend. And what you're seeing is the gap over that trend right now is really, really wide. In fact, it really hasn't been this wide since kind of that big drop we saw towards the tail end of 2021 into 2022. When you have these big gaps in the SOXX ETF, it wants to come back to trend. I think that's where we're heading. Now, do we come straight down? I don't think we do that. If we do, there's probably deeper issues in terms of the broader economy, maybe some broader macro stuff. But I think we come back down to trend as this thing works back down to trend. Those are your buying opportunities. You're going to see the same thing with the SMH ETF. You pick your decent one. I mean, we'll maybe on next show, we'll kind of compare the SOXX and the SMH. We'll look at the holdings and see maybe one has maybe more Nvidia versus the other. Maybe one has some stocks weighted a little bit higher, but more or less technically they're in the exact same spot. The SMH has been channeling up since really 2012. So we're well over a decade uptrend. When you are at the top of these trends, tell you what, I have a red line in here on purpose. Red lines typically is where you sell or you take kind of a pause. The green lines are where you're looking to buy. You're up here closer to a red line. I'd wait for this one to pull back as well. AMD more recently. Now we are on a monthly chart. We could change these to daily charts. It really wouldn't really change a whole lot, particularly as it relates to AMD. It would just give you, more data points to look at. But AMD more recently made a new higher high. It didn't confirm it more recently, but you're not overly concerned. There's certainly an area right here at about 160 some odd dollars per share with AMD. This does seems to be an area where sellers step in. We are down below that. You get movement in AMD anywhere south. I know it sounds like a lot, but these stocks actually are really volatile. Just in the past 2 years, we've gone from 57 to 229, now back to 145 on AMD. So these things are volatile. Anything under $100, really as it starts to approach $100, really should be bought with AMD. Now, Intel, as most of you know, I've never been a huge fan of this stock, and it's really played out not only in the fundamentals, but the stock chart as well. The stock has really done nothing for the past 25 years. Now, if you bought it right, there's been moments where you could get this thing under, really $15 per share and you've done okay. But if you had put your money on Nvidia or certainly AMD or even the SOXX ETF, you'd be up even more. I've got two different boxes here with Intel. I'm not interested in it at this red box. This is where the sellers emerge. This is where Intel just kind of falls on its face fundamentally as well, maybe from a product perspective. But in this green box, I think you can make an argument for Intel. You might even want to shrink this down to this level. Right now, we're basically in the middle here. I'm not really excited about Intel. We'll wait for their earnings. They'll report here very soon, and we'll get a better idea of it. Now, we talked about ASML. Also, like the ETFs, like many of these stocks, are really at the top of the channel, way too high at the top of the channel. Anytime you've gotten to the top of the channel on this one over the past 20 years, it has actually been a moment to sell. So I've got a red line at the top. Anytime you look at one of my charts, where I have a red line is where we're not really interested in buying it. I try to put these light green lines in the middle of these channels as you start to approach this. In fact, we're not too far away. You get back down to about $800 on this one. That's where you could maybe start a position, because sometimes in these channels you find footing in the middle of the channel. Obviously, as you continue to make your way lower south of 800, you are absolutely stepping in on ASML. Now, TSM also, very much like the rest of these stocks, have been on this breakneck uptrend really since the bottom of 09, but really since kind of the beginning of time on this one. We are way over and above this trend. Last time we saw this, we saw a big, massive pullback from about 115 all the way down to 60 on this one. Not necessarily saying that's going to happen again, but if this technical pattern plays out, which I think it will, you should have deeper pullbacks in TSM, and that'll create a buying opportunity. Let me throw Nvidia in here. I don't have it in my kind of queued up results, but we'll definitely look at Nvidia. It's going to look like the rest of these stocks. Way north on the top of a channel. You're on a monthly view here. You've been in an uptrend on this one really since the beginning of time, but more specifically since 2016. Anytime you've gotten to the top of the channels, yes, you can float there for a while, and that is an outcome that we'll be monitoring. can you float here for a year or two? Just like you did during this era. Look between 2017 and 2018. You just floated at the top of the channel. Now, you still retreated, and it wasn't really a good time to buy. I would contend the same thing with Nvidia. I did a video, maybe it was like a couple of months ago, but I said, hey, look, by the middle of summer, by the end of summer, everybody's going to be pricing in basically all of Nvidia's upside. Not that the stock is going to crash and burn and go down, but your like outperformance there, I think it's going to be a little bit difficult. AVGO, which is Broadcom, is in a beautifully channeled uptrend since the beginning of time. Like literally, I mean, this is a stock you absolutely want to buy the dip on. It's up here at the top of the channel. We're expecting this one to make a break. You could start buying it at the middle of the channel, which in the shorter term, probably anything south of about 140. NXP is not a stock a lot of people talk about. When I was at CES, they had a really, really nice booth. They do a lot of really cool things in the semiconductor space. This one also in a very beautiful uptrend, gets way overextended at times, and then often always comes back to trend. We're monitoring this one. This one's actually not in a bad space. I tell you what, you get NXP back at like 220. That is your time to move. And then we'll throw in a memory maker here. Maybe we'll include a couple of more next week. But Micron, we did a video on our main channel a couple of weeks ago on their earnings. We thought, hey, this was an area where sellers have stepped in. We're on a monthly view here. We could probably change this to a daily view, get a better idea of kind of this, you got a bunch of red candles that have emerged more recently. This one, as it approaches this middle of the channel line, I'll switch this back to a monthly view so you can kind of see this better. But you approach the middle of the channel, anything right at $100 is where I'm starting a position. And when I say starting, but let's say you want 100 shares of Micron, ticker symbol MU. Okay, so as it pulls back to 100, this is where you buy 2 to 5 shares. Okay. And again, this is if you want 100 total shares. And as an investor, I would make this decision in advance. Okay. Decide how many shares or how much dollars, if you will, you want into Micron based on your whole portfolio, based on your allocation, based on your risk tolerance, those types of things. Make that decision in advance. And when it pulls back to this level, buy a certain percentage. You get a deeper pullback, you buy a little bit more. So, most people call this dollar cost averaging. I take your dollar cost averaging strategy and combine that with kind of a price chart, and you're going to have a really winning strategy. Micron, anywhere south of even $80 is kind of a back the pickup truck moment because, again, like all of these stocks, they have these beautiful kind of channeling, but we have I'm talking about big deviation in price where from 2016 to 2018, you went up 475% on this one. But at the same time, from 2021 to 2023, you lost about 50%. So these things swing big, and that is what makes the semiconductor industry so interesting. And that's why we'll be back every weekend with this one. I think we'll come up with the name of the show. If you have any ideas, I've thought of maybe Semiconductor Saturdays or Semiconductor Sundays. There were a couple other ideas that my team had, but unfortunately, there are already podcast and maybe trademarked websites that we couldn't use. So if you have any ideas, any suggestions for the program, for the channel, I'd love to hear them down below. You'll be seeing me more here on this channel going forward and a lot more in the future. I wanted to take about a month off, just kind of relax with the family and get my wheels back under me before we kind of dive into this new project. Again, launching a new media company in the financial space, and I look forward to hearing from you and seeing you more here in the future. Thanks for tuning in today. We'll see you again next week. Good luck with your investments.